Welcome to the weekend report for the week of July 28th. Here's exactly what you need to know in about 60 seconds. Higher lows are sufficient. If we go lower, we're probably going to want to buy. Good. European Union and the US, we got a deal. Good. We got a 90-day extension between China and the US. Whoa. Another 90 days? That's correct. So fundamentally, we got some bullish news. Technically, we're very bullish. It's a matter of how bullish. So buy some insurance if you need to, then buy the dip. Guacamole, salsa, even if you like sour cream, whatever you like, higher lows are still sufficient. And until that actually happens, which means a lower low, there's nothing really for us to worry about. This note right here as well says that we're fully bully boomtown. I know that sounds a little bit silly, but I want to make you remember. I want to make it memorable. That's why I'm saying it. So it's a matter of breaking the chart. The daily one has to go first, so higher lows are sufficient on every time frame. Here's a last note you need to know in about 60 seconds. Here's the key dates. I even put warnings beside the dates that have higher volatility. We have earnings for Meta, Microsoft on Wednesday. We also have the Fed decision on Wednesday. We got Apple and Amazon on Thursday. And we have core PCE on Thursday. We also have the close of the month and the open of the month. There you go. That's everything you need to know. Really? Is that it? That's basically it. That's all we really need to know. So first half of the week, second half of the week. In the first half of the week, there's one major event. So here's what I want you to think about. It's just, what if we go up? What if we go down? And what if we go sideways? That's it. Yeah, that's all charts can do. They can only go up, down, or sideways. So here's a note for the weekend ahead. I said news in focus is Trump and the tariffs. And you got to deal with the European Union, not EI. So congratulations, President Trump. You got yourself a deal. And there's other deals going around too. So the UK and India, they got a deal too. And there's an extension for 90 days. That's good. Algo says buy. We got a warning, like I mentioned with SH. And I can actually show that to you right now. But since your time is so valuable, I want to make you come back without even having to ask you to smash your thumbs up or subscribe. I want to deliver value and content. Why? Hey, I'm getting a little bit tired of making these super long videos when the calls to action are right here. Here's the 5 stocks I'm looking to buy on the 31st. There's a few stocks I want to buy on Friday as well. I like Plug, SCDG, Stellantis, Target, and BW. Why? Because I think they can make me some money. The ones that are passing right now are the top 2 and the bottom 2. I particularly like Plug and SCDG. I already own them in my 401k account, and I would purchase them here. Pause if you need to. Those are the ideas for the week. And then I'll show you the other ones too, just since your time is so valuable. Why? Because my time is valuable. I didn't have to do very much work. It took me about 30 minutes to get ready for this week ahead. I have a routine, as you can probably see. And I know exactly what to do with these. They mean something to me. They might mean nothing to you. PSQ, SH, and UNH. We would buy these at the end of the week. They currently yield a 10.4, 16.4, and 10.3 risk reward, which means if we're right, we make $10. If we're wrong, we lose 1. We can definitely be wrong, but if you flip a coin and half the time you're right and you make 10, and half the time you're wrong and you lose 1, that's called a money machine. It's called a printer. It goes burr. Just load the cartridge. That's all you got to do. So the radar for the invest alerts are right here. And then the radar for the weekly are right here. So we close the monthly candle out. That's very important for me. I have it noted right here. Close the monthly candle out, open a new one. Buy new ideas. Look for new ideas on radar. Easy peasy. Why? We're going to make some money. And then looking here to our notes, this is easy. Higher lows are sufficient. If we're above 610, you buy the dip, right? Just choose what kind of dip you like. Do you like ruffles? Do you like tortillas? Like, what do you like? And then grab the salsa you want. Some people like pico de gallo. Some people like mango salsa. Man, whatever. Why? This is getting easy. It should be fun. It should be easy. It should be frictionless. The market should just go up. And until we get back to 610 or lower, it's not hard pennies. It's easy. If in doubt, buy some insurance and then buy the dip. I know that sounds silly, but that's what you want to do. If you don't know what to do, listen to people that are smarter than you. That's what I do. Instead of bull or bear, I like to characterize the markets as hard pennies and easy dollars. Blue sky breakouts or not blue sky breakouts. My rule of thumb, reserve aggressive trading for easy dollar environments. Why? Save your stamina, save your energy, preserve it. While the markets has improved, I would still describe this market as fighting for hard pennies versus dollars coming easy. This is in 2023. Yes, it is. And it's something I say frequently. The trend is your friend. The trend is your friend. So, yes, you can argue with me why we shouldn't be at new all-time highs or why we shouldn't form higher lows. The fact of the matter is we are forming higher lows and we are in blue sky breakout. And we had the warning here. It goes all the way back to our annual note from 2025. Do we have it here? Let's see. I know I shared it, so I'm not sure where I put it. But anyways, here's the notes a little bit easier to read. So we got our levels right here for SPY for the week. Going down to 627, that would be a weekly higher low. And then weekly higher high is going to get printed at the beginning of the week. So here we go. I got about 5.5, 6 minutes under my belt. Let's get a few more under here and give you a plan. I give you a number of ideas. I gave you 3 on this one here. I gave you 5 on this one here. That's already 8. Those are my best ideas. And I really want you to pay attention to these because it's not like I have some kind of secret recipe. What I have is a risk reward that is baked into my ideas here. So it says that, like I said, if you're right, you make 10. If you're wrong, you lose 1. What could happen? It goes up, down, or sideways. So if we now think about the first half of the week, because this is what I'm doing for myself right now. Actually, I'll show you one more thing here too. Why? Well, what's the point in trying to hiding it? All you can do is join the wait list. You can't even join and get these notes right now. So pause if you need to. What I'm going to show you is this right here. I already showed you the radar. I already gave you my notes for the S&P. I gave you my notes. And now I'm going to show you what I'm doing in my 401k account. Why? Because why not? Here you go. Here's exactly what I'm going to do. Here's my exact holdings. Yes, it is a small account. It's a real account. It's an account I plan to grow from right now in my 30s until I'm in my 60s. So I'm trying to make money. I'm trying to learn the skill of investing. And I'm a much better trader than I am investor. But I'm learning the skill. I'm doing pretty good. But look, I even make mistakes. So don't take everything I say as like the Bible. It's not. Intel, I bought that stinker, right? It's down 10%. It deleted 0.5% from my account. Yes, it's part of the game. Doesn't hurt my feelings right now, but every time I buy Intel, I just lose. So, right, I'm getting a little bit tired of the stock, but I seem to be a sucker for pain. Here's exactly what I'm planning to do. My buy and sell pockets are updated. That's the numbers right here. Buy, sell. There's a legend down at the bottom. If it's green, it matches with green. If it's red, it's with red. Pause if you need to. All the levels are right there. The closer we are to my buy area, the more I want to buy. A name like UNH or a name like Berkshire Hathaway are near the top of my list. We also got Wendy's and Novo Nordisk. Cruise control, there's nothing to do, right? The plan is set. We realized profit in our high flyers and we rebalanced. So we still got tons of risk in the account, but here's what we did. We realized profit, which made it real. We closed some positions out, which means that we've actually funded them. If you look at this column right here, it says funded. What does that mean? It means the position is free. If it's 100% funded, it's literally only house money. It is impossible for me to lose my own money. I like to trim stocks to make some money. Like you can see here, let me just zoom out a little bit so you can see the names. You can see right here, we got Bumble funded for 40% because it's up 60% here. I got DDD funded for 21%. And then I got ON and NVTS funded for 19 and 24. I'm not perfect. Like I said, I make tons of mistakes. But what I'm trying to do is to show you a live account. And I've been doing this for a number of weeks now and actually for a very long time. I'm trying to show you that the system that I really employ is called risk management. That's my secret weapon. I understand exactly how much risk is in my account at any given moment. If I buy something, I also know exactly how much risk I'm taking on. It's up to 1%. It's worked pretty good for me too. Why? Hey, when I'm right, I make 10. And when I'm wrong, I lose 1. This is what the chart ends up doing. It goes mega up. Mega up. Yeah, mega up. I'm up 18.92 on the year. 18.92%. Yes. And I believe, I don't know for sure, but I believe that what's going to happen here is we're going to find ourselves some easy dollars. Why? It's getting easy for me. It's getting easier. And if you note, again, just anecdotally from my one account, I haven't done anything for a while. Why? The trades have been suboptimal. I've been preserving my energy. Why? Because easy trades are right around the corner. Right? That's exactly what you're preaching. Yes, I'm showing you that I'm doing what I'm preaching. And the ideas that we entered that I showed you since we reset the account, because people always think, oh my God, I can't just start new, or I can't just open up an account and start trading. Yes, you can. You don't have to go all in either. We bought BMY on Friday for 16.7%. And we also bought SOXX. That's at 1.6%. We're going to double that one there if we get another alert, which means the market goes down. If not, I already know this is going to get insurance. This is going to be insurance. I bought some, right? About 1.6% of insurance. I could lose up to 0.47% on my account, half of 1%. If the market just goes up from here, this is what's going to happen. Let's go back to the notes. Let's round the video out now. Why? Because I'm really trying to stretch it out here to get to 10 minutes. I was literally done in 2 minutes. I don't need to make these long ones anymore. Dots are sufficient for me. I'll make it easier for you to follow the dots, though. Here's what I will look for, because this is exactly what I am looking for. I'm looking for, like I mentioned, first half, second half. So if all we needed was, what was it, 638 for a weekly higher high, boom, we got it. And after hours, meaning overnight, we're likely going to continue to hold that into trading on Monday, which means we're going to form a higher high into Monday. So higher low, higher high as of Monday open. It's only going to be Monday. So don't get ahead of yourself. Why? Because I literally told you that higher lows are sufficient, but let's focus here. If gap ups are for selling and we sell off on Monday, where do we have to go back down to? The higher low, which is down to 634.84, looking at the L. Okay, 634.84. So if that happens, we're going to be where? In a fail break. A fail break just means that we have a barrier. We go over it, fall back below it. So we break out, but fail to hold it. Failed breakout. That's what could happen. That would be your bearish setup. What would have to happen? It would have to hold all the way into Friday. A failed breakout can be a topping pattern. It is not a topping signal. We have to go all the way down to 626 to do that. So failed breakout is your warning, potentially, if we close the week below that. This week, we got to go down to 627. We have to drop an additional 10 points after that. We just got 2 deals with the biggest countries in the world. I think we're going to be okay. But buy insurance if you need it, and then buy some stocks. Buy the ones you like, understand the risk reward, and then just do it. Here's where things could get a little bit tricky into the second half of the week. But I actually think it's going to be perceived as bullish, and I'll show you why. There are high volatility events starting on Wednesday all the way into Friday. So as we close those candles out on Thursday and on Friday, what does that mean? If we gap up, and gap ups are for selling, and we continue to sell all the way into Wednesday, into Thursday, and into Friday, we could have a bearish close to the monthly or bearish close to the weekly. It is possible. I just don't think it's again, possible, not probable. So we got to get all the way to here. I already showed the levels, 627. And then we'd have to lose the monthly higher high. So at a high level, if I look at the data and I ask myself, how would I interpret this if the forecast was the real number? I'll tell you. It's not that hard. Get out of your stupid ads. ADP non-farm payroll. Hey, people aren't losing their gerbs anymore, but they're not getting very many gerbs. That's good. Why? Means inflation is probably going to go down. Whether or not it's real, that's how the data should be interpreted. GDP, strong like bull, right? And it just got revised again. 2.37, 2.4, exactly. So it's going to be in line. That's strong. It's above 2%, above growth, right? Above potential, sorry. BOC rate decision, yeah, that's on Wednesday. They're going to likely pause. FOMC, likely going to pause. So we already know they're going to pause. So it would be a surprise if he didn't, and we'll leave it there. But then, and when we go into Thursday and into Friday, we don't see this number yet. That is going to be an increase. 0.3 is not a good number. Why? It compounds too high. The Fed wants it down to 2. So we got up to 2 last time. If we go up to 3, what is that? High, higher high, higher high. Oh, F. High, higher high, higher high. That could be some more bear juice to go through on Wednesday close into Thursday, into big tech earnings, and into what I think will be a negative number. I don't know what's going to happen to that one there. We can actually go back 12 months and see what it would be. Can quickly see if I can forecast it. Let's see here. We're going to add July. We're going to delete July. So where's July here? It's 2.6. So if it's below 2.6, it'll be in line or lower. So it's going to be a nothing burger. It's just that, oh my God, 0.3. Last time I didn't do anything though. And then, sorry, that's average hourly earnings compared with unemployment rate actually ticking up. The Fed has unofficially said that around 4.5% is the number that would get them to lower rates. So if more people lose their jobs, I know that's not a nice thing to think about, but more people lose their jobs between now and like September or October, that would likely increase the odds of a Fed cut. All right, I really stretched today's video out, so I did my best. I gave you my entire plan, and I plan to be pretty busy this week. So here's exactly what I plan to do. If the higher low pattern tracks, we can get bullish all the way into the end of August. The green candle man says buy. So what are we doing? Man, green man says buy. So we're buying. There's green dots everywhere, like we're on the highway in cruise control. Enjoy the ride. I'll see you at the end. Thanks so much.